Good day and welcome to the Aurum PropTech Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY Investor Relations. Thank you, and over to you, Ms. Gupta.
Thank you, Tanvi. Welcome to Aurum PropTech Limited Q3 FY23 earnings call. It gives me great pleasure to welcome the management of the company, represented by Mr. Ashish Deora, founder and CEO of Aurum Ventures, Mr. Onkar Shetye, Executive Director of Aurum PropTech Limited, Mr. Hiren Kumar Ladwa, EVP Investment of Aurum PropTech Limited, and Mr. Kunal Karan, CFO of Aurum PropTech Limited. Before we start the call, I would like to remind you that anything that is mentioned in this call which reflects any outlook for the future or which can be construed as forward-looking statements must be viewed in conjunction that the risks we face, uncertainties and risks we face are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual report, which you can find it on our website. With that said, I now hand over the call to Mr. Ashish Deora. Over to you, Ashish.
Thank you, Asha. Good afternoon, everyone. Best wishes to all for a prosperous and healthy new year. I am glad to connect again with the investors community in this 7th quarterly call under Aurum management. It is always a pleasure to interact with all of you. Welcome everyone, and thank you for your continued interest and commitment to Aurum PropTech. Let me first brief you on the exponential growth that the company has achieved. I would like to highlight 2 points to this effect. Firstly, we have today announced our Q3 results, where the revenue has been 38.6 crores. This is a 5x, I repeat 500% of our Q3 revenue last year, which was 7.53 crores. Secondly, we had projected our Q4 revenue to be 50 crores. I am glad to state that we are confident of achieving that by the end of this quarter, which is Q4. What is significant here is that projection of Q4 revenue of 50 crore was made in the beginning of the year, when our revenue was to the tune of around 14 crores. The point that I'm trying to make is that in a very short time, our team has been able to demonstrate not only exponential growth, but also the maturity to project and achieve. Our revenue growth momentum shows our execution discipline of our strategy and also validates the growth of the PropTech sector as a whole. We believe that real estate as a sector is being transformed digitally. From AI to blockchain to the metaverse to IoT, the new age real estate customers and enterprise are experiencing the need of these tools and technologies. Moving from revenue growth, I would now like to take a few minutes on our strategy. We continue to sharpen our focus on delivering technology, capital, and services for real estate consumers and developers. What also keeps us motivated is the need for innovation across various aspects of real estate, whether it is technology, capital, or services. Analyzing data and then integrating it with various services for the benefit of our consumers is a challenge which we are focused and determined to change. I already touched upon our mindset of exponential revenue growth and strategy. I would now like to take a minute on how Aurum PropTech is creating sectoral knowledge and leadership. Considering that the PropTech sector is at a nascent stage, learning and sharing knowledge with our customers is necessary for us on an hourly basis. To structure this approach, we launched our brand positioning this quarter. We believe that our brand tagline of Future Ready encapsulates who we are and what we stand for. Future Ready declares that we elevate experiences for our customers, real estate developers, and capital allocators by combining our tech skills, data skills with our real estate domain understanding. This brand positioning will also increase recall value and achieve benefits of scale across our various products. In this quarter, we also launched the Aurum Entrepreneur in Residence program. Our core belief is that entrepreneurial mindset is necessary to run digital products. This program will create necessary engagement with young entrepreneurs. To conclude, at Aurum PropTech, we have constantly delivered value for all our stakeholders over the last 2 decades. And we believe that Aurum PropTech is in the right direction as per our group ethos. Let me now hand over to Onkar, Executive Director, Aurum PropTech, to talk about our ecosystem.
Thank you, Ashish. Welcome everyone, and thank you for your continued interest in Aurum PropTech. Let me now briefly share a few highlights during Q3. Today, we have an active customer base of approximately 250 B2B SaaS customers and more than 7,000 RaaS customers. Our SaaS services cater to developers across 46 cities and towns in India, while our RaaS services are consumed in 15 cities across the country. More than 30,000 potential buyers were active on our tech platforms during their buying journey in the past quarter. Our platforms also hosted 5,000 plus brokers and channel partners, enabling distribution of residential projects of 350 plus developers. This achievement has been possible only because of our collaborative effort of all our partner companies. In a short time, we are seeing the network effect of Aurum PropTech ecosystem, which will keep on getting bigger. In our connected living segment cluster, we have seen tremendous traction in the co-living RaaS offering. To expand our offerings and play a pivotal role in the branded co-living segment, Hello World, our co-living and student housing company, has launched Hello World Select, a premier co-living cohort which expands our target customer base and also upsells to existing tenants who would wish to upgrade to a more premium co-living facility. We also onboarded Aurum Analytica, formerly known as Career Socially, during Q3. After the acquisition, rebranding, and setting the strategy for Aurum Analytica, we have quickly focused on integrating all our efforts with data science and analytics. We are happy to state that they clocked twice the amount of revenues in Q3 compared to what they did in Q2. This is a trend that we have constantly observed, wherein rebranding and re-strategizing the products have shown growth in businesses of our partner companies, primarily due to the network effect of Aurum PropTech ecosystem. From the investment finance cluster, Integro Asset Management garnered further fund commitment of rupees 100 crores to take the total commitment to a 205 crore. With a strong pipeline of investors, we are looking to have a commitment of 300 plus crores by March 2023. In our enterprise efficiency cluster, Sell.do, the real estate SaaS CRM product, continues to be the market leader in India with 6,600 plus licenses. Beyond Walls, a digital marketing and broker aggregation solution for developers, launched their operation, having quickly scaled up in Pune since its launch in February 2022 and started generating revenues in Bengaluru and Mumbai also. There are more than 5,000 brokers already participating on the Beyond Walls platform and benefiting from it. We have and we will continue to build and grow our SaaS and RaaS products across the focus cluster. The upcoming quarter promises to continue this exciting journey for us. With this, I would now like to hand over to our CFO, Kunal Karan, to detail out the quarterly financials and related matters.
Hello everyone. As you heard from Onkar about our business update, let me walk you through the details of our financial performance. Today, our Board of Directors has approved the results for the quarter and 9 months ended December 31, 2022. We continue our march with a strong set of numbers which reflect our ability to grow progressively at a scale. Our consolidated revenue for operations for the quarter is 38.6 crores as compared to 28.3 crores in the previous quarter, up by 36.8%. The revenue for the corresponding quarter for the previous year was INR 7.5 crores. So the growth there is 5 times. We have reached revenue annual run rate of INR 150 crores at the end of the current quarter and are in line to reach the targeted annual run rate of INR 200 crores in the month of March 2023. Our total income for the quarter is INR 41.2 crore as compared to INR 30.8 crore in the previous quarter. EBITDA for the current quarter was INR 2 crores as compared to a loss of INR 3.4 crore in the previous quarter. This reflects our approach of conservative cash utilization. The consolidated cash at the end of the quarter was INR 83 crore. We had to raise another 250 crore from the balance right issue. In terms of segmental revenue, SaaS and VAS revenues for this quarter were INR 5.6 crore and INR 33 crores as compared to INR 4.7 crore and 23.7 crore respectively in the previous quarter. We continue to see a good traction for our services in the markets we serve, and we are confident of our growth journey going ahead. With this, I will now pass on the call to the operator to open the floor for question and answer session. Thank you very much and appreciate your continued interest in Aurum.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, you may enter star and 1 on your phone. The first question is from the line of Rahit Shah, individual investor. Please go ahead.
Hello.
Yes, sir, you're audible. Please go ahead.
Yeah, hi.
Please
What is
proceed. Yes.
Yes, okay.
Mr. Shah, please proceed with your question. As there is no response, we'll move to the next question, which is from the line of Qasim Akram, individual investor. Please go ahead. Qasim, your line has been unmuted. Please proceed with your question.
Can you elaborate on the synergies between Integro Asset Management and Hello World Technology?
Thank you for your question, Mr. Qasim Akram. There are immense synergies and synergies between both these businesses, primarily from 2 aspects. One, where it creates a huge differentiator for our co-living business when it is backed by an asset management company, where the investment into the assets for further scale-up and expansions could come in from the asset management base. And it likewise similarly benefits the asset management company because the investors get control by the way of an OpCo in form of Hello World on the investments that they could make in. So in a way, it is creating a PropCo-OpCo model today. We do have further plans to set up sector-specific PropCo at Integro Management at Integro AMC that will facilitate the scaling up of our Hello World business. In addition to it, it also helps us tap in the Hello World customer base for future cross platform integration by the way of offering it to various other products like Beyond Walls, etc.
Mr. Akram, just to add to what Omkar spoke, we model of a property company and an operating company, which we call a PropCo and an OpCo, is widely popular in creating value on both sides, because a good operating company increases the yield of a property company, and a good property company brings sustainable business to an operating company. And if you see the largest asset managers globally, they understand this and they do this very well. So we have these two partner companies, and in both of them, we are trying to create this synergy with Integro and Hello World.
Nasim, do you have any further questions?
No, thank you.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, good evening. Hope I'm audible.
Yes, you are.
Yeah, first of all, congratulations for such a stellar result, and also the fact that employee cost as a percentage of revenue is decreasing from 70, it has come down to 40. But I have a question that in Q1 of Concall, you mentioned that it's 10 crore and won't increase any further for this FY. But as of now, I guess it's 15. Yeah, it's 15 now. So would like to know the reason behind this, and also where should we expect this to stabilize?
Sorry, could you repeat the reason behind? Could you please repeat that?
The increase in employee cost, and also where should we expect this to stabilize?
Look, the rise in employee cost, as you see our results, so with every quarter we are just adding our new companies. So with the addition of new companies, definitely a group of new team members joins us. So the reason of increase is because of that, and definitely it will grow till we add new entities in the Aurum PropTech folder.
Also, to add to it, if you look at the last quarter, in addition to having added our new partner, we have also expanded in new regions in our existing products. Point in cases, Beyond Walls has gone live and operational now in Mumbai and Bengaluru. And likewise, Hello World is also scaling up its co-living business. Both these businesses are RaaS in nature, where they are tech-enabled ops businesses, which require a certain increase in employee strength. And these two, so in addition to what Kunal said, increasing our markets and geographies has also increased the
Yeah. Okay, that's great. And the next question would be on the EBITDA front. Can you please let us know the EBITDA on the RaaS and SaaS business particularly?
So in our segment results, we have given the EBITDA numbers. So RaaS will definitely have the depreciation cost within it. So if we remove the depreciation, then the RaaS result, RaaS EBITDA will definitely improve over.
Okay, and the last one would be, do you have any ballpark figure or any sort of aspirational target in terms of revenue for the next 2 or 3 years?
Look, I think at this stage we are focused with the Q4 revenue, which we believe will be to the tune of 50 crores, which makes...
We also believe that would be possible.
Sorry?
We also believe that 50 CR would be possible in Q4.
So I think what we are sort of dealing with now is that when we set this 50 crores, at that point of time the revenue was only 14 crores, which was in the first quarter of this year. And we have similarly exponential growth numbers for the upcoming quarters, and we will like to kind of detail that out in the next earnings call, in the Q4 earnings call. As of now, the focus is to deliver what we have already projected, what we have already committed.
Okay, great. Those are my questions. I'll call back in the queue.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your touchtone telephone. The next question is from the line of Rahil Shah, individual investor. Please go ahead.
Hello.
Yes, please proceed with your question.
Yeah. Hi, sir. Thank you for the opportunity. Just wanted to ask, do you have any comment on the traction in the real estate industry, like the growth in this segment and how it will benefit the company?
So, I think real estate as a sector, like we've all been reading and going through multiple reports, is poised to be a $1 trillion sector by 2030, this decade. There are three areas where essentially the sector is changing. One is from a point of view of more and more institutional capital coming into the business, which demands better efficiency in real estate businesses, which are development businesses and construction businesses. The other thing that is happening is the consumer of real estate, because of the upward trend in digitization and internet penetration, is also changing, and so are his demands. The consumption of real estate, more so from a purchase point of view, from a buying point of view, or from a renting point of view, from a discovery point of view, is now more tech-led, and that is effectively helping our customer experience businesses. The third thing that is the third thing that is changing in the real estate sector is that we are now looking at more and more urbanization, more and more movement into cities, which will effectively require more real estate to be constructed in form of residential spaces and also office spaces as more and more people come to work. Now, the demographic of these people who are coming to work is between a generation Z and millennial, which again falls into our offering of products from a co-living platform to a transaction platform to a distribution business. So all these three tailwinds that we are seeing in this sector are immensely effectively helping our products and services, so to say. I hope I'm able to answer your question.
Yes. Just one more. What would you say is the company's addressable market size in that sector, or maybe overall?
We are in the midst of quantifying this sector. This is, I would say, one of a kind effort to quantify the sector's size in India. It's being done with an institutional partner, and we'll be soon coming out with this report. But if we draw some trends that are happening globally, typically 7 to 10% has been a penetration or has been the size of a sector vis-a-vis the real estate size in countries like US and China, and that is where we see this sector at. We would say if India doesn't, or if India PropTech doesn't reach 100 billion market size, then it will be an opportunity missed for the entire sector and everyone working in this sector overall.
Okay, got it. Thank you so much, sir, and all the best.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your telephone. Ladies and gentlemen, to ask a question, please enter star and 1 on your phone. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead. Rahul Jain has left the queue. Participants, if you wish to ask any questions, please enter star and 1. We We have a question from the line of Arshad Toshniwal from Bottoms Up. Please go ahead.
Hello. Hi, sir. Actually, new to this company and post my disco, I have not tracked it. So wanted to just get a brief sense about our business model, our market size, and our typically economics of the operations.
So we'll break this question into three parts. The overall sector or our business comprises of two verticals, SaaS and RaaS.
Yes.
I hope I'm audible. There is some disturbance in your line. If you could...
Just a minute, I'll mute myself. Is it better now?
It's better, yeah. So I'll start with the last one first. There are two verticals when it comes to revenue in our business, SaaS and RaaS, which is products and tech-enabled real estate as a service products. Between these two businesses, we have various focus areas or clusters, as we call it, which are taking care of a specific value chain in the entire real estate piece, which is a very complex value chain. It starts from invest and finance, which is the which is the start of a journey of any asset when it comes to development. It has two products, Integro Asset Management and Aurum Infinity, which typically deal with wholesale investments and retail investments in a regulated form and fashion. Then we have enterprise efficiency products, which deal with tech expertise and solutions to real estate developers and enterprises. And under that, we have products like Beyond Walls, Sell.do. Beyond Walls is a broker aggregation platform. Sell.do is a CRM. And Aurum Analytica is, again, a data science product that is offered to developers for better lead management and nurturing. It also has products like the HouseMonk, which takes care of rental management business for property owners. The third part is customer experience, where we have a bunch of products ranging from Aurum InstaHome to Aurum KuberX to Aurum Live, which take care of the customer experience part when it comes to purchasing properties or raising finances or reselling properties in the resale market. And the fourth segment is connected living, which deals with which deals with a connected living experience in the entire once you purchase or once you own the asset. So there we have a product or an offering called Hello World. The economics of operations are primarily driven by the nature of the businesses, which are SaaS and RaaS.
Sorry to interrupt. Just one thing, just to, I think, clarify these four verticals. So if I understand it correctly, investment finance is the one where, say, for example, a builder would require finance or a retail person would require a finance for housing related one or construction, then you would facilitate that. Enterprise efficiency are more, for example, something what an info edge platform also does, like broker aggregation or different rental management businesses. Customer experience is the resale market aggregation. And I didn't get exactly what the connected living experience. So if you can help me correct where I'm going wrong or if there is anything different.
That is correct. I think you've got the three segments absolutely right. The fourth segment is the connected living segment, which deals with post-purchase monetization of assets from the asset owner's side and from the consumer's side, discovery and utilization of these assets more from a rental point of view. And there we have an offering called the Hello World, which is a co-living offering. There are student living is a huge opportunity within that co-living segment, a sector which is largely untapped, largely uninstitutionalized in the Indian markets. So your understanding is absolutely right. There are four segments as we have outlined, and these products that we defined under these four segments.
Okay. When you said this fourth co-living, it is more like stanza living as a comparable I'm using to understand the business model?
we would categorize it as the same segment. However, our approach to this business and our strategies to take care of this problem and innovation statement are different. Hello World focuses on student living and young working population. However, it is a asset-light operation. We do not get into owning these assets. Typically, we are more cash positive than these businesses, than the other business that you compared with. And our strategies to acquire properties are also different from what a stanza living would do.
Okay. So I'll just ask a few questions again on this part itself, then would go to the economics part. But for example, when we say, for example, an investment finance business, there we are the aggregators between the financial institution and the borrower. If you can just give some example in a simplified way to understand these four segments, and maybe what is our business or revenue contribution from these four segments in the overall mix.
Sure. So I will start with your later part first. I will start with the four segments revenue contribution. The revenue contribution for investment finance was 79 lakhs in this quarter. Revenue contribution for customer experience was 2781 lakhs. The revenue contribution for enterprise efficiency was 1584 lakhs, and for connected living it was 3706 lakhs. The consolidated revenue contribution year to date till December 2022 has been 8150 lakhs. The nature of each segment has got 3 to 4 use cases, and in accordance to these 3 to 4 use cases, the revenue models are defined likewise. Primarily and fundamentally, the revenue models, for example, in the investment finance segment, work in the way of a regulated facilitator to enable investors identify properties to invest. Investment Integro does not itself invest into any properties. It only enables wholesale investors to pull in their money into a regulated financial instrument, and that is then further deployed into projects which Integro indexes out, identifies, discovers, and then deploys that. I will also call in my colleague Hiren Ladwa to further elaborate on this question, please.
Thanks, Onkar. Mr. Arshad, just to elaborate on what Onkar has mentioned across all the use cases or all the four focus areas, and maybe let's pick up just investment finance. There, the overall aim of our strategy is to actually facilitate financing across different use cases, right? So right now, yes, we are focused on Integro AMC as one conduit to channelize investments into residential real estate assets to start with. Then we will add other types of real estate assets like commercial real estate. So the aim is to here, look at and grow from the assets under management, pay them efficiently, and hence add value to the primary customer, i.e. the developer, in enabling them to get more efficient and quicker and reliable capital, and on the other segment, on the investors, to give them a transparent and a very well underwritten investment asset in the real estate sector, right? So that's the problem statement we are trying to address. Similarly, in all the other focus areas, we are looking at a couple of problem statements, which, as we said, in enterprise efficiency, it's to enable the developers to reach to their customers faster in the most focused manner, and hence by delivering that value, we bring value to our company, right? So I will not go into other focus areas because each focus areas will have their own individual use cases, right? I hope that
okay.
And the business model.
I think I'll have to read more about it, so I'll use the right issue document, etc., to update myself. But okay, got it.
Thank you. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Hi. Thanks for the opportunity. If you could share the organic and inorganic breakup of this growth and what are the key drivers for organic growth?
Look, in the current quarter, out of say around 39 crore, the organic number is around 2.5 crores. So mostly the inorganic part contributes around 90% of the current revenue. And the organic part definitely will take some time because our products are just getting ready. So it will definitely mature over a period of time. So currently 90% of our revenue is from inorganic.
90%?
Yeah.
Rahul, that has been our strategy to build this business. When we started the journey of building the PropTech ecosystem, the fastest route to start building this was to identify mature products and businesses that are already in markets and acquire and reposition and add further products under it. The key growth drivers to these inorganic businesses have been primarily the broker aggregation piece, which is a large innovation area that we have been able to solve. Institutionalization of channel partner network and distribution network across the country in real estate is an untapped market. There we have got a phenomenal traction by the way of Beyond Walls. That has been one key growth driver. The other key growth driver has been, of course, Hello World, our student living and co-living business, and a business which is largely well understood in markets like US, and with institutional capital allocators coming in from those areas into this country, this business will get further traction as we see it. What it requires, what the business, the key growth driver here has been really two areas. One is more and more students coming back to cities, back to normalcy, and more working population coming back to normalcy. And also the urbanization trend that we outlined earlier in this call, that how India is now moving towards a 45% urbanization, which requires more rental, affordable, flexible, new age properties that people can rent, and of course properties that people can buy with a better customer experience.
Right.
To add, this is Ashish here, to add to what Onkar just said. The in-house products, to say so, they have started revenue only recently. One of our home loan products, which is KuberX, which was launched 3 to 4 months ago as a POC, even that has gone ahead and now disbursed loans worth 70 odd crores cumulative. So we believe that some of these products over 2023 in this calendar year should do reasonably well. But the way we look at it is that there is a lot of our own management bandwidth that gets invested with companies that we own. First, the 100%, which is Aurum Analytica and Hello World. We have kept them as a different entity, right, because we acquired them. But in a way, these are the companies that are run by us. And between Hello World and Aurum Analytica, the revenue is around 20 odd crores out of 32 crores in this quarter, right? So if I have to include 20 crores plus 3 crores, that kind of becomes more than 50% of the or even more, around 60%, 70% of the total revenue. And then comes the companies where we own less than 100%, right? Where we assume that while it takes a little bit of our time, but there are also the founders that are doing heavy lifting in those businesses. And then that kind of takes lesser time of ours. But if you look at the management bandwidth that kind of gets stretched, it gets stretched into 3 buckets. One is our own products, of course. Then secondly comes into the companies where we own 100% equity, which is Hello World and Aurum Analytica, which have been really growing at a tremendous pace. and then also with the companies where we have 51%, where we have other founders, other entrepreneurs to do heavy lifting along with us.
Right. And just quickly, if you could share your thoughts in terms of how you would see some of the challenges around the interest rate or in general macro to kind of to your adoption theme of the tech adoption theme in the sector, which is a definite tailwind to you, but how some of this macro may impact your growth projection?
Typically, one thing that is definitely happening across the country is after the banking crisis between 2014 to 2020, there has been a lack of banking capital available to real estate enterprises or developers, which is requiring more interest, which is in a way affecting the interest rate. We see that more institutional capital from outside the country will flow into this sector because of this demand for capital, and this is happening not just for real estate but also for other sectors as well. That is one key part that we see happening in this sector. The other is, of course, like we earlier said, there is a tremendous change in consumer behavior between 2015 to 2020 in form of discovery, consumption, and post-consumption, and that is largely going to fuel the tech enablement and evolution in real estate sector from a consumer point of view.
Right. Thanks for the color. That's it from my side.
Thank you. The next question is from the line of Devang Chokani from Devang Management. Please go ahead.
Good evening. My question is that since Hello World has been a star player for us since the very start, so are we planning to expand the functions of it, or are we planning to keep it intact and not growing it further?
Hello World has definitely been a star player for us, one key cog in the entire integrated ecosystem. And in the same line, we have added one more product line in the Hello World business, which is Hello World Select. This is a premier co-living cohort, which basically expands our target customer base and also upsells the existing tenants who could wish to upgrade their properties to more premium facilities. We have strategically wanting to go deeper in the student living segment, which is a large segment which we understand and have also got good control in, and would like to go deeper in the existing market. Hiren would also like to speak about this business further.
Thanks, Onkar. Mr. Devang, the way we see Hello World's positioning in the co-living market, as Onkar was saying, yes, we have identified those couple of specific segments. But at the same time, our business model is also very much, bordering or directionally towards a viable business model. And with that, we are looking at leadership positions in at least 3 cities to start with by the end of next year, wherein we would have the number one spot in terms of the occupied beds, if you will, or as well as live beds. Right. So that's definitely the direction that is guiding our expansion plans as far as Hello World's capacity addition is concerned. And it will come at the back of not only the existing segments, but as well as the new premium segments that we are venturing into. Right. So we are very focused around, garnering leadership positions in some of the markets that we have identified across the country, where, supply, demand, scenario and the unique economics are very, very sound for our business model.
Thank you. I had one more question regarding another product called Aurum Insta Home. So what are the growth plans and potential for that?
So Aurum Insta Home's business model is unique. It revolves around click, set, sold. The idea is to tackle three problem statements in the real estate residential real estate resale segment. First is to offer a fair price or offer a fair value for people who or owners who are wanting to sell their apartment, by the way, online and real time. By the way of that, also understand the assets on sale in the residential real estate market. In primary real estate market, it is easy to source this inventory because you have one sector or one stakeholder to connect to, which is a developer, and then you get a control over, let's say, 200-300 crores of asset sizes. Whereas in the residential resale market, because of the retail format, it is difficult to get control on this inventory. So that's one. The second area is essentially offering people an opportunity to expand their reach when it comes to selling the apartment by the way of offering our suite of broker aggregation platforms, analytical tools like Aurum Analytica, and so on. And the third is, of course, the sold, where we want to offer branded apartments, which have standardized set of offerings, which can be offered to home buyers. So the strategy revolves around these three. We have been able to do a POC in Navi Mumbai market, where we launched Aurum Insta Home. The data science and analytical capabilities for MMR region have been completed. We would now like to launch that as well. And further on, we are looking at going multi-city when it comes to the click, which is the AVM, and then of course go deeper in these markets by the way of offering our set offering, which is the exclusivity offering in the cities that we expand into.
Thank you so much.
Thank you.
Answered my doubts.
Thank you.
Thank you.
A reminder to the participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Faisal Hawa from SG Hawa and Company. Please go ahead.
So have you made any estimates as to what our total revenue would be for the financial year 23-24? Approximately, we will not hold you to it if at all there is some indication that we can give. And secondly, is there any thought process within the company to at least merge all the companies which are 100% owned by us into Aurum, and so that we don't have this subsidiary accounts, which is always difficult for many investors to understand?
So, Faisal bhai, on the numbers for 23-24, of course we have the internal numbers that we are sort of working towards, and we believe that the growth momentum that we have seen in this year across quarters should continue, is what we can only say today. But yes, in the next quarter, we will like to kind of go out and make a projection like how we did earlier, when we had projected that we will be a 50 crore quarterly number, making it a 200 crore company. We'll like to talk about it in the next quarterly earnings. As far as the subsidiary working is concerned, Kunal, you want to?
Yeah, look, this subsidiary, definitely we will also like to consider the things, but unfortunately what happens, all these subsidiaries have been created keeping some business requirements in mind, where each of the subsidiaries require some different set of approvals and things from the statutory authorities. So to keep all those things independent and not overlapping, that is number one. And second, they have got a different set of management, each one of them, like the 100% subsidiaries that we have made that founders to continue with us. So we want them to run those entities independently. When it gets mixed up with a bigger organization or a listed company directly, then it becomes difficult for them also to run it independently. So we can offer ESOP to the employees at that level of entity for their operations that they do. So these are some of the factors that we have to keep in mind, and it is a very early stage right now because all these acquisitions have happened over last 6 to 9 months. Maybe going ahead after some time you can take a call on these things, but definitely we'll keep your suggestion in mind to consider the things.
Mr. Hova, we would like to draw some parallels with something like a TCS, which has got, let's say, a practice. But this is a practice with a flexibility for the entrepreneur to run that business as a P&L for himself and still keep him motivated. So that's one primary reason why we have kept these subsidiaries in addition to what Kunal said about the licensing requirements of each of these businesses.
So you feel that it will be, even in future, it will be very difficult to merge these companies?
It is not difficult to merge these companies, but it's a I would say conscious call to keep these companies at the subsidiary level for these two outlined reasons. It is not difficult to merge these companies or businesses.
And can you just comment on how this fractional ownership business is growing, or how is it shaping up with the regulatory authorities?
So the fractional ownership space is a very complex area. And from day one, our approach was that we want to enter the market in a fully regulated format. Last quarter, we completed our legal opinions on this. And basically, there are essentially two approaches. One is that it is looked at as a real estate fraction, or the other it is looked at as a financial fraction. For scalability and for being a compliant and regulated business, the opinion is that we look at it as a financial fraction, and in accordance to that, we have outlined our go-to-market strategy in alignment with Integro Asset Management, which has got the right regulated licenses, and also are creating a distribution network or a distribution team that will be able to work on the distribution piece of this business.
Okay, so basically we will be looking to SEBI to register and all.
Yes, we have already applied for the RIA license for the distribution network, and in terms of the operations team, we have already aligned our strategy to roll out an operations team, which we will soon elaborate on.
And about this AI and facial recognition software that we are developing for gauging customer reactions and all, any progress on that? And are we generating enough data to really feed the software?
Yes, we have been able to integrate this data into our existing products. Point in case is that this data is now integrated with our softwares Cell.do. Soon Aurum Analytica will also start using these softwares, where we'll be able to track consumer behavior across close to 25 to 35 parameters, and then start predicting their behavior over a course of period. Data science and analytics is a very complex word. It will take some time for the model to, I would say, start predicting data with accuracy that can give a certainty of go-to-market.
And when will the call for the IPO for the rights issue be made by the company?
So we are planning it to do it in the next quarter, which is Q1 of the next year. This is something that we had planned initially, that we will do it either in this quarter, which is Q4, or Q1 of the next year, and we are on track for that.
But we are almost sure that now our acquisitions are almost complete and our suite of products is also there.
So the way we see it, that the acquisitions that we have done, they are all growing at a very reasonable numbers. They are in the right direction. They are in the right strategy. We believe that we have some more work to do with the existing acquisitions, and also with the products that are being built in-house. But having said that, the way we are, for example, you talked about two subsidiaries. Hello World, which we acquired, had an annual revenue run rate of 38 crores when we acquired, and now they are at 66 crores. And despite not losing...
What are they at now? Sorry, the line was bad.
66 crores of annualized revenue now. They have done 16.5 crores in this quarter. Okay. And when did we do the acquisition for the... And we had done this acquisition like 6 months ago, 7 months ago.
Got it.
So within 2 quarters, 2.5 quarters, we have been able to kind of make it from a 38 crores to 66 crores. And I reiterate, without losing of any cash on operations, without being EBITDA negative. If we had to go down that path, then of course the growth could have been even more. But as our philosophy is to have growth, but with an underlying aspect of profitability. So I think the acquisitions are doing reasonably well under our management. And if there is a compelling opportunity to do something like that, then we will not shy off that. But as of now, we believe that the companies are being handheld very well by the Aurum management.
Thanks a lot for your time and answering my questions so well.
Thank you. The next question is from the line of Mahendra Sharma, individual investor. Please go ahead.
So, should we put up?
Sorry to interrupt, Mahendra. Sorry to interrupt, Mr. Sharma. Your line is breaking up in between. We request you to use handsets.
Clear now?
Yes. If you can go
ahead. Great show so far. My question can be broken into 2 parts. One is that given that certain part of the products and services that we talk about or which we have certain level of overlayer with a couple of extremely well-backed VC-funded companies and some stalwarts in the industry. So here what I'm referring to is someone like a Square Yards or something what an Anarock is doing and the larger IPCs. So one is, yes, at this point of time, things are in a very early stage comparatively, but when the real and the opportunity is very large. So how do we foresee reacting to stiff competition coming in from them, maintaining profitability? That's one. And second is, what would be the impact of this on the future, I would say, projections that we have?
So interesting question. Every market, every industry will have competition, and we understand that we don't shy away from that. Our approach, however, is quite unique here from the businesses that you spoke about, where these businesses are purely people businesses. And though you mentioned them as competitors, I would probably refrain from using that same category here. We are a tech-led business, and in addition to being a tech-led business, it is an ecosystem of PropTech products and services, which includes various solutions that are offered to a variety of stakeholders, right from investors, wholesale and retail, to developers, to B2B2C, which is channel partners, to consumers, and of course to renters also. Whereas the 2 businesses that you spoke about are only in, let's say, one sector of a primary residential real estate sale or broking business, or a secondary real estate sale or a broking business. And that is not really comparable to...
No, I would like to point out here, I believe Square Yards is also building a complete ecosystem where they have the same asset management to metaverse, to transaction, to developer side of transaction and all as well. So maybe a couple of the products that we talk about have exact overlayer with their, and they are also tech-led kits.
I think you have called out right. Yes, there are two odd products that would be similar to what we have as an offering. But these 2 products that you outlined are new markets and new initiatives in this industry. Primarily, the business that you spoke about, or the company that you spoke about, is a broking company, is a broking business, whereas we do not define ourselves in that category anywhere.
what Onkar is saying, Mahendra bhai, we are not saying that we have any monopoly on any segment. We are just saying we are unique because we are led by tech. And as far as well-funded is concerned, I mean, our numbers are pretty known that we have some 80 odd crores in the company, and we have another 250 odd crores that we will raise over next few quarters or few years. So we are playing our own journey, and within that, I'm sure there will be competition of various kinds that will come in. Some will not have tech capabilities, some will not have funding capabilities, some will be led by PE, so they will be losing more capital, so they will have that barrier. And I mean, this is how a sector evolves. And our own real estate experience as Aurum also kind of comes in very handy at that point of time, because we know what the problem statements are, what the pain points are, how to address that. Where should tech be deployed? Where should tech might take a back seat? So all these are the things that a sector kind of offers you, and we enjoy creating and businesses around that.
Sure. So I believe that any so-called competition and disruptive market strategies adopted by them have been factored in when we're doing our projections for the coming period.
Yes, absolutely. We keep a keen eye on these businesses, like you as mentioned. You had also called out a second question on this, which was the impact of this competition on the future business. With the sector size being so large, and with only 3 to 4 players, including us being the key players in this market as of now, we see certain scale within these 3 to 4 players itself, and which will keep and these 3 to 4 players will keep on dominating this 100 billion sector as we build this over the decade.
Sure. Thanks a lot.
Thank you. As there are no further questions, I would now like to hand the floor over to the management for closing comments.
Thank you, Asha. We thank all the stakeholders who have joined the call and participated on this call and have kept on continuously tracking us over the past 3 quarters. We have put in immense amount of effort on building this with prudence and cadence, not just us, but also our partner companies. We really see a lot of value in these problem and innovation statements that we have intend to solve. And by the way of doing that, as a byproduct, we also aim at creating shareholder value and stakeholder value for all of us, for all of you. So thank you for your continued interest. We would look forward to see you in the next call. And until then, we would like to say goodbye. Thank you so much.
Thank you very much. On behalf of Aurum PropTech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.